portfolio is the biggest, difference, and that can get very complicated quickly. Accounting for all the digital assets, ins and outs, buys and sells. There's, staking income, there's lending out there. So there's a lot of different ways to account for the portfolio. A lot of funds also have different structures. We see a lot of open-ended hedge funds with a lot of private investments. So you'll have side pockets. And then on the venture side, you see a lot of closed-end vehicles with liquid trading strategies. Investors, for the most part, want to make sure that their assets are safeguarded and there's timely and accurate reporting. I think investors entering into this space, it's a little daunting for them because they might not have any digital asset exposure. They might not be invested with the typical fund managers that they would in the traditional finance space. So just providing those assurances that their money is safeguarded and they're going to get timely, accurate, reporting is, I think, what we see more from the request from the investors more than anything else. There's a lot of enhanced due diligence that comes into play when you contribute in kind. Experienced fund administrators allow investors to easily contribute in kind as well as receive distributions in kind. So we've created several partnerships with some custodians as well as some data providers to provide data to make sure that the investor is who they say they are, that they have the source of funds to contribute, and you can track the coins that are being contributed. There's a big move of institutional money. There's been institutional money coming into the space, but I think it's going to get much more pronounced in 2024. There's been a big shift of more venture capital entering the digital asset space. So we'll see that, I think, continue. You may see some trends of, some investors taking some money off the table now that they've made some capital, recoup some of their previous losses. You might see new investors that had not previously had exposure to digital asset funds start to enter in 2024. But as every year that passes in crypto, you see more of the framework around the asset class as a whole continue to strengthen and grow with new providers in the space, better controls, better clarity around some of the regulatory uncertainty. So I think all of that is, pushing crypto in the right direction. Surrounding yourselves with good providers that have already built this instead of trying to build it yourselves. You can always augment proprietary technology to your own operations if groups don't provide that solution. But there are a lot of solutions out there that you can utilize to get you up and running much quicker than building it yourself.